Let's speak about Redefine International, which owns properties in the UK, Germany and Australia.
So this one is a little older and a little bit more established and a little bit more conventional, has rather a diverse portfolio of UK properties. Remember, it used to be called CIREF. It came out of the Redefine Internationalization Initiative. It still has Redefine South Africa, Mark Wayner's group, as an anchor shareholder, and they have participated in certain developments, but it's done a lot of portfolio improvement in recent years and is quite a sizable player in the European property market.
Market cap 12.6 billion rand, current yield of just over 9%.
The share price chart does not look good, and I'm not quite sure why, so let's get it up and then Lance can take a turn.
Lance, I think you can take this away.
Yeah, so this is more a Brexit story. It really is focused on the UK, and its properties are almost exclusively in the UK. So it has really been impacted by the pound. Remember, these are all Rand share price graphs that we're looking at. So that heavy devaluation of the pound is coming through in these share price graphs. You could overlay that graph, it would look pretty similar.
But the opportunity here is that if a single event has impacted a share price to that extent, it doesn't necessarily have to do with the underlying business, and you would anticipate that this would be a recovery.
It's an excellent point, because I think this one in particular actually represents very good value. You're quite right. If you look at the underlying property portfolio, is it sustainable? Because that share price graph is sort of saying there's trouble here. It's not. There's no trouble.
There's nothing wrong with the company.
Now, to Paul's point, they've actually improved it. They've optimized it. They've signed quite a number of new leases post-Brexit. So just as a sign that things are still solid in their portfolio, it's an attractive yield. This is a pound yield, let's leave it at that, but quite a juicy pound yield. And this Brexit fall-off, I think, represents a buying opportunity.
Now, you see, I'm getting excited.
Look, they had a portfolio of quite interesting properties across the UK, places like Wigan and secondary cities. The portfolio addition, they bought a portfolio of properties that used to belong to Aegon UK, which is an insurer. Sizable. I think it was about a third by value of what they had already, and it brought properties like Banbury Cross Retail Centre, which is like one of those centres I was describing earlier. Banbury's like dead in the centre of the UK. So those kinds of things, and I think they'll continue. Mike Waters' team will continue to weed out stuff they don't want, consolidate
Paul,
and improve.
we need to call it hot or not.
Okay, no, I think it's a hot. At current levels with the share price having fallen so much.
I'm echoing my sentiments as well. I'm calling it hot.